Okay, as you know, there is really two parts to our renewal process. Blue Cross brings us the rates. They look at our experience and determine what they think it will cost to insure our group next year. So they set the pricing, and then the committee then evaluates where's our group reserve, what rate do we want to actually pass on to the member districts. So we did that at the last committee meeting, and the results are what we'll bring to you today. So we actually got an average of a little over a 0.5% decrease from Blue Cross and Blue Shield. And so we were very excited about that, even though the inflationary trend in our industry is anywhere from 6 to 9%. You know, we should have gotten that much of a renewal if we were on track with the claims they expected. So this decrease means we were better than what they anticipated our group to spend in claims. So that's a good news thing. But also Blue Cross is doing very well financially and have some excess reserve dollars that, as a nonprofit company, they try to keep rates as competitive as they feel they can. So some of those reserves in the Blue Cross accounts is also helping to hold our rates down. And had we not been dealing with healthcare reform, we could have even earned an even greater decrease, because about $425,000 of next year's premium is being allocated to the new healthcare fees and taxes. So I just wanted to point that figure out as well. But keep in mind, we're like a $27 million annual account. That's how much we collect in premiums and pay out in claims, well, that's not the good way to say that. If we were to have a worst case scenario, we'd spend $27 million. Is a better way to say that. So as we looked at that decrease, and as the committee is responsible to try to bring stability year after year as long as we can, we decided not to pass on that decrease and rather just keep rates held at the current level. Much easier for bookkeeping, maybe, not to have to change it for a few cents or $1 or $2 here or there. So I see a lot of positive affirmation of that, so I appreciate that. It just helps us too as we administer everything as well. And that allowed us then not to use as much out of our group reserve. Now, granted, it's not a huge savings to the group reserve, but we'll take as little bit as we can, because what we like to show you year after year on this slide, if you look down at the legend, the blue line represents the maximum premium level that Blue Cross has established for the $1,000 single deductible plan. So the rate we had currently is $513.23 if you look in the very lower right-hand corner. The renewal rate, the decrease, represents a new rate of $508.82, but we are only passing on $457. So this is an indication, and you can see the gap back when we started in 2002, when we really didn't have any group reserve dollars. Our premiums were very close to what we were passing on to the districts, and over time that gap has widened. At some point when our reserve runs out of money, you have to pay the real premiums. There won't be any pot of money to take those out of. So our committee tries to keep that pot of money growing and projecting for as long as we can. This visual will then show you here in the upper right that we are seeing a slight downtick to close that gap and make our money go further, and it's really all due to the decrease that we earned. Okay, so I mentioned we are going to be sending out a lot of the forms, and I'll send it out in an email. There will be a lot of attachments, and just make sure, especially with the rate sheet, that you are using the correct form. And so if you're an existing member district, well, let me ask this, is Scott County here? Okay, they might, I don't know if they're joining us live or not, but So then, they are the only ones that are different. All the rest of you are considered existing member districts. So then the only other key for you to know is, are you planning to be a grandfathered district or a non-grandfathered district? And make sure you're looking at the right label. You will find the label at the top, arrow sheet, or arrow on my spreadsheet up here. You'll see the label, existing member districts grandfathered. So make sure you're using the right sheet. And you will see it as a $0 increase, a 0% change. You know, it just locks in the same dollar amount that we're currently paying today. The other blue arrow that you see is pointing to the only other change on this handout. And the only other benefit change to you as a grandfathering district is how you treat the eligibility for dependent children. In the past, we have allowed dependents to stay on to age 26 unless they were eligible for coverage through their own employment. Now that last language goes away, and birth date, age, is the only qualifier for eligibility in your group. So you could have some new dependents or some of these dependents being added back on during open enrollment. Okay? We don't care if they're married, but that your employee's child, not their in-law, daughter, or son-in-law. In-laws are not allowed, nor are grandchildren, but the children of your employees can be on to 26. Any questions about that? We don't care where they live. We don't care if they're in school. Age. Okay, so that's the only benefit change. Anybody see a typo? It's hard. You see, it makes it easier when we hold rates. We have less mistakes when we can make. Okay, then I think we're good to go on that form. If you were Scott County, you would be looking at, and I want to point this out because it will bring up the conversation about grandfathering versus non-grandfathering as well. You will see on Scott County that the middle blue arrow is pointing to a new line item across their sheet. This is referencing a new level of overall protection to the member. It's a maximum out-of-pocket, which counts not only the deductible and the co-insurance, but all the co-pays. And once anybody's out-of-pocket from all areas, including prescription co-pays, hits that new maximum out-of-pocket, the $6,350 a person, then Blue Cross pays 100% for the remainder of that plan year. So that's a tracking that is part of the non-grandfathered plans, not only for Scott County within our group, but for other non-grandfathered plans sold out on the market. That's part of the new healthcare laws. And their dependent age limit changed. Okay, now, we've been having you get to know your employees so that once we become subject to the employer penalties, you are in a position to know if you're offering coverage to your 30-plus hour full-time employees. So you've been learning that, tracking that, trying to figure out how are you going to count their hours once we hit the go button, right? So some of you are emailing me about people who you've identified being full-time and you want to bring them on now here at the next open enrollment. You cannot bring them on now unless you're one of these 4 districts. They have already notified us, or they responded to this project of notifying us who they were, with their dates of birth, census information, would they be single or family, and they will have to buy in to get the premiums at the current level with that have been reduced by that $50 buy down that we were discussing earlier. So these are the only districts that can expand their eligibility definition. Is there any question regarding that? If you've found someone that you've now realizing you will need to offer them coverage, don't be doing it this fall, unless you're one of these. It will come at a later date, and we'll have more slides on when that later date will be. Okay? All right. You will get in the email a handout that covers the COBRA rates so that you can communicate here at open enrollment with anybody you have on the COBRA group. Do you have a way to identify that? You know if you have somebody on COBRA? Yes, no, yes, no. On Blues and Roll, they can get that information or not? No?
We get a report from Blue Cross.
There you go. Quarterly report. Okay. All right. So now you know if you've got somebody, it is up to you to communicate the open enrollment changes because they can make movement between deductible options just like an active employee can. And it's up to you to communicate the new cost and everything with the COBRA people. Okay, Blue Cross doesn't send them out. They will just send them out the new billing amount without any explanations. Okay. You'll get a handout that we call your cover sheets. Make sure you don't start using this until you pay the October premiums. So it's what you're sending to Danelle in September. Okay.
Just to explain that, the portion of the premium that goes to Blue Cross did go up, and so that's why those numbers are different. So
yes.
You can't continue to use the current
the
spreadsheet.
Same number. Right. So. Thank you, Stephanie. You will notice that how it's divided between the fixed costs and the claim cost did change at renewal. Yes. Thank you, Stephanie. And then this is a Blue Cross handout that you can use to, with employees to designate if they want to move deductibles or if they want to waive coverage. They would be telling you why they're waiving their coverage through you. Reporting will be a big thing going forward. I've got a slide on that as we come up. So gathering this information is going to be important to you. We have always monitored, and I know the font keeps getting smaller year after year as we keep adding the years, but this is just a great track record to show the stability of coming together in the Essdack Health Insurance Group and the stability that's caused our plan over the years. Just an FYI piece. Okay, then let's talk a little bit in more detail about the grandfathering. And, of course, we have not caused you to lose grandfathered plan status as it relates to plan design. So the only thing that you have to monitor in order to keep your grandfathered status is how are you splitting the cost with your employees? How much is the district paying? How much is the employee paying? And we continue to benchmark back to the original effective date of the healthcare laws, March 23rd, 2010. And so that is still a requirement that you'll have to do here now at the upcoming open enrollment. And of course, you track every classification of employee, even if you only have one person in that classification. That's still if you're treating any one individual differently, that's a different classification. I think we've gotten most of you figured out, and you will have multiple tabs in Jerry's spreadsheet, but I need you to double check that again. If you're treating anyone separately, they should have their own tab and classification that you're monitoring. We're also going to include in your email a handout that may help either your superintendent or your board or with teachers negotiation. It just kind of talks about the grandfathering importance and a little bit of the ramification. Because if you were to lose your grandfathered status and become non-grandfathered, here's kind of what that means. You'd be required to comply with more provisions of the healthcare law. For example, in number 2, you'd add 100% coverage for certain preventive care services. And then since that was originally written, it's been expanded to include a lot of women coverages and even free birth control meds and breast pumps, and it just gets broader than you might have ever expected. And while that's great coverage to the people who would be able to take advantage of it, it comes with a price tag. And that's the whole point of that, is there's a cost associated with these changes. Number 3, you would incorporate those maximum out-of-pocket limits like I referenced back on slide 8 when we were looking at the non-grandfathered handout that Scott City uses. And those amounts, while the $6,350 seemed pretty high, I mean, who's going to accumulate that much in out-of-pocket copays? Those amounts are going to be indexed for inflation annually by the Health and Human Services. And so we already know they've released for 2015, the $6,350 becomes $6,600. And the family $12,700 cap becomes $13,200. So that's the way the non-grandfathered plan designs are developing and modifying. Item number 4 is one of the reasons why I know several of you districts are still hanging on to the grandfathering status, is because you might have administration that gets treated differently, or the certified get treated a little better than the classified, and there'll be non-discrimination testing that will eventually be defined by the Health and Human Services that will apply to us if we become non-grandfathered. And we can have some districts within our group be non-grandfathered and some stay grandfathered. So this really is a district-by-district choice. Exactly how you choose to split the premiums will determine where you fall. And then number 5, just in the last few weeks, non-grandfathered plans are now required to recognize and cover legal same-sex marriage spouses if you offer coverage to spouses of legal opposite-sex marriages. Now, Kansas doesn't recognize or marry same-sex marriages, but if you have an employee come who was married legally in another state that did allow it, and they come and move here, you would have to recognize their spouse because it was a legal marriage at wherever it was performed. So we do see in that number 6 where we say et cetera, you know, one of the reasons we're trying to hang on to grandfathered status too is because it changes all the time, and we lose control over how our plan is written. We have the ability to incorporate these changes, but we can do it if that's the direction that our group wants to go in, rather than being forced to incorporate them. So that's the et cetera, in my opinion, is one of the stronger. We never know what's coming. Okay, so during this grandfathered attestation and verification process, you've completed a form for Blue Cross. It looks like that, and I think Stephanie put the one for this upcoming plan year at your seats. So mine on your slide pack still shows that it's dated 2012, but I just didn't change that visual because I don't think the form has changed at all. So you will, as you're sitting down with your Blue Cross person, or as they're sending out your renewal paperwork package of forms for you to sign, you'll be completing that and confirming with Blue Cross whether you're grandfathered or not. But then I want to go back to this, I'm going back a slide to make sure you catch this. On Jerry's Excel spreadsheet, we're going to have you do that internally yourself now. I wondered how long before I got a reaction. Yes, we think you're ready for this. This is like the 5th year we've been doing this, and it can be very helpful to you as you are planning and preparing, if you really know how to use it and what it's capable of doing. So, first off, I think every one of you should have an Excel spreadsheet in your inbox somewhere or saved on your computer, right? And it doesn't even matter what year it is, because the top portion always stays the same. So I need you to email Kathy if you cannot locate an Excel spreadsheet. Otherwise, we're going to assume you have them. You have one. I just need you to find one. Well, and if you've made changes, make sure it's the most recent one. If you don't have a good spreadsheet that has all the tabs, let us know and we'll forward it to you. But when you get it open, here's what we need you to do to unlock it. If you know Excel, hopefully, and I'm not an Apple person, so I hope it looks somewhat similar, you have different tabs, the File tab, the Review tab, the Insert tab. You should have a Review tab that you can click on and unprotect the sheet. And here's the password, ABC123 will unprotect that sheet. And then you will want to update your years. You'll have to do that every year if you want to do the find and replace and put that year in and replace it with the new year. That makes it quick. There's like 7 or 8 places where you need to update the year. So I've marked those date areas with these red arrows. The only other change you'll need to make is there on the lower half, and you'll be taking the prices from this sheet and just plugging them in. Okay? And then in yellow is where you indicate what your district contribution is towards the new premium. And you'll be, the red and green is automatic for you. You'll be able to tell if you're going to comply or not. And if you're not complying, it's up to you to take that action to correct it so that you can sign the Blue Cross form that you're grandfathered or not. We're making this adjustment to help this guy right here.
No, Jerry.
You know how Carl and I struggle with this every year.
And we're always willing to help you if you have any struggles, absolutely. But if you ever get to an audit, you're going to be the one that is going to have to be able to document. You need to understand this. You need to have the paper trail and be able to show an auditor what you've been doing and how you've been compliant. Okay? Yes, let us know if you need help, but we're going to rein off Jerry and you get this, baby. Okay. Upcoming events. Every year, you know, Blue Cross pulls you together for the group leader meeting where they tell you about their company processes and procedures and walk you through that right before the renewal. We've scheduled August the 13th. We know that's a little later than usual, but we had a lot of other schedules to try to work with because we have selected Brian Johnston, and I think some of you know him as well. He's an attorney that the KASB uses as well on some of the healthcare reform issues, and we wanted another healthcare reform seminar, but with some legal backbone so that you could really get some definitive, supportable responses to some of the different issues, especially as it relates to counting full-time employees, because we know how challenging it is for the school districts to get that all figured out, okay? And the different circumstances you're dealing with that really aren't addressed very clearly in the law. I can give you my opinion, but that's all it is. So a legal background will give us something more substantial if we have tricky areas or find we've got to support actions in the event of an audit. So mark that date. It will, what do you usually take, a couple hours, Stephanie, yourself? And I'm imagining this could be a good full day. Maybe the attorney will be another 2 or 3 hours, but so plan for the whole day maybe. I don't know exactly what time we'll start. If you're going through the next several months here, develop a list of questions that you can really take advantage of this attorney connection we've made for you. But let's take a few minutes then going over some of the rest of these slides that will bring you up to date on some of the healthcare reform things. We had a bunch of new guidance issued in February that we've been wading through and figuring out how they apply to you. There is now a 1-year compliance delay to 2016 for medium-sized employers, defined as those having between 50 and 99 full-time equivalent employees. So as we ran around and did the drill downs here not that long ago, you know, our question to you is, are you over 50 or under 50? And so we kind of got everybody fit in a box as it relates to that. Now you need to determine if you're borderline 9,900, you need to drill back down into this, how do you count full-time equivalencies, and determine if you're now a medium-sized employer or a large employer. Does anybody know right now they might want help doing that, or you're going to be a borderline group? So Stephanie and I can make sure we're on your radar, or you're on our radar. Or are you obvious? You're comfortable, you're either under or over, nobody's close? Okay. All right. Okay. So then the second bullet item there is there's an extension for fiscal plan years to October anniversary. So this is what has stopped us from automatically adding those full-time employees that you've been tracking and watching. Are they 30 hours or more or not? This is what's preventing us from adding them on this fall, October. We, until February, we thought the employer penalties were going to become subject to our group as of January 1 of 2015. And so that we weren't having a second open enrollment or redoing open enrollment in January for a January 1, we were making sure what we did this coming fall, October, the plan year that overlaps January 1/15 was going to be in compliance. Well, in February, when this new guidance came out and delayed it to your 2015 fiscal plan year, you know, we were, this totally changed our direction. Okay, so now the very first date, employer shared responsibility penalties for not offering coverage or not offering affordable minimum value coverage will not apply until the earliest of October 1 of 2015. And if you're in the 50 to 99, it won't apply till October 1 of 16. Okay? They also gave us some rules in order for you to take advantage of that delay. I think I've addressed the districts that I'm aware of would have a transition issue. So I think all of you are going to be able to delay until the October 1, either 15 or 16 compliance dates. And then, of course, all those regulations clarified a lot of other questions, but it really didn't add a whole lot more as it relates to educational employer scenarios. So really, the overall structure of the law and the major rules are still in place. It's just a matter of the effective date. And one of the big things that we're still not sure we know everything about, or what the formats haven't been established yet, are what kind of reporting will you be doing. But we do know you're going to start providing data on January 1 of 2015. This is not going to follow your fiscal year. So we know you'll have to start providing something in the month of January to the government. And they're going to use this data to administer the premium tax credits for anybody that's enrolling for a policy on the exchange. And they're going to use this data to know whether they have to impose an individual mandate penalty on anybody who's chosen not to be covered. And they're going to use this data to make sure the coverage you're offering is minimum essential coverage, and then to enforce the employer penalties. You're going to see more information about these different forms. An Internal Revenue Code 6055 and 6056, and even an individual 1095. You know what 1099s are. This is 1095 is also going to be something that's issued. What's in uncertainty is how much of that is Blue Cross and the different insurance companies providing to the government, and how much of this data are employers providing to the government. So we'll be working out those details and letting you know as we learn more there. But that will need to be on your radar next calendar year. The real question that schools have is, how are we tracking that full-time employees? Now, I do want Mr. Johnston to be our focal point on that, but I want you to start getting some things in your mind, because hearing it over and over helps us understand it better. But I'm still not going to be the concrete, this is the way it's going to be, because we'll want his feedback too as well. But in general, we are tracking hours of service. There's no other way around identifying one of your employees other than by hours of service. And so we're using the common law employment standard provisions, and if it's that kind of an employee, here's who we're talking about. If they're paid or entitled to payment for a performance of a duty, or even if they're entitled to payment during periods which no duties are performed, that's still considered to be your employee. And of course, that's one short sentence to cover many pages of details, so I'm not going to drill down much deeper than that. And tracking the hours of service not only helps you determine, is that person a full-time employee, someone I have to offer benefits to, or be penalized if I don't, potentially, or it is also used to determine, are you 100 plus, are you 50 to 199? It's that you have to be able to identify people for both of those counts. And so you can use actual hours worked on your hourly employees, or 1 day worked, or 1 hour worked in a day is a day, or 1 day worked in a week is a week. if you've got any of those kind of equivalencies for your non-hourly. But there is a lot in those rules about don't try playing any games here. An auditor is not going to like that. Yeah, Dawn.
There's a question on the period with no duties are performed. What does that mean?
We're talking like FMLA, if they're off on USERA.
Sick leave or personal or-
Yes,
Okay.
yes.
So you're not talking about the way you pay a bus driver, nothing you can make or not. You pay him per route, but it's equivalency of 2 hours. So like if your morning route takes you an hour and 15 minutes,
You
I
get 2
pay you
hours.
for 2
2 hours of credit.
One route, so it's twice. But for this, I've just been adding, but they write down the actual hours they work actually. So I can use that though, right? I don't have to use 2 hours.
Right, but that would be the exact kind of question I'd like you to write down and submit to this attorney so you get an official
Okay.
response. But yes, you can use actual hours worked.
Okay, I didn't know if that was just for a period where no duty
No.
was performed.
No.
You're talking more personal vacation.
Effort.
Gotcha. Thank you.
And I'm talking for school districts, remember, this has already been decided that the summer is the equivalent of their academic year. And I hope one of you write down a question that says, so are the summer months tied to the previous school year or are they the start of the new school year? Dawn, do you want to write that down? But you know what I mean.
Yeah.
Those are the kind of questions I want you to write down. Okay, so as you're tracking these hours, a full-time, as I've been emphasizing, somebody who works 30 hours a week on average. 130 hours in a month is the equivalency of 30 hours a week. If you have some of them going 28 one week and then 35 the next, and their weekly varies, you can use a monthly as a variable. But this also came out that will be of interest to you. The seasonal employee definition was broadened. Usually when we think of a seasonal employee, the first thing that comes to our mind is somebody who works in Dillard's over the Christmas season. But this is going to be a much broader definition than even that. So if this is a person hired in a position for which the customary annual employment is roughly 6 months or less. So this is, I think, a help in defining like your Rule 10s, those coaches that just help out during a sports season, that yes, during those times they might work 30 hours a week or more.
Summer help.
Your summer help. And the law is even, you know, usually you don't like to see vague words like this, but they're, you know, they used an example of, using vague words like roughly in a definition, but they even gave the example of, for example, if a ski resort in Colorado, where they had an exceptional year, it snowed much longer than normal, so they actually worked 7 months that season. They're still under HHS considered a seasonal employee, even, so they're not counting it to the actual day, 6 months, and you're now no longer seasonal. So they even built some flexibility into that. So that was good to see. But as I stated earlier, not a whole lot more new as it would relate to you school districts. There was more as it related to adjunct professors, but I don't think any of you guys are dealing with those types of positions in your day-to-day world. All right, so one of the things you've been waiting for, or hopefully it's been somewhat on your radar, but you haven't been losing sleep over it, other than Jerry. Jerry, have you been losing sleep over it? Is how do we track? What is that time period we look at those employees that we're not sure whether they're going to be 30 hours or more. Those are the people we're talking about. You know when you hire somebody, because you have to make that determination today whether you offer them benefits or not, you know whether they're in positions eligible for benefits or not. And once you're subject to the employer shared responsibility rules, which is either what? October 15th if you're over 100, October 16 if you're under 100. When you become subject to those laws, you better at that date be making sure you're offering coverage to your full-time employees. Those are your compliance deadlines. So in order to know who those people are on those dates, we're talking about these measurement periods. And the new regulations that came out in February talked about and added a new term called a monthly measurement process. And that's going to be, in my opinion, a lot like what many employers do today. If someone is eligible for benefits, they offer them coverage, but if their job status changes, they're no longer eligible for benefits. And while it doesn't happen every month, you're kind of aware every month when somebody goes from full-time down to part-time and they lose eligibility, you deal with those situations when it happens. So that's kind of what the new regulations brought to the table. We're not telling you you have to do this different than what you've already done. Set your eligibility, make sure it's as lenient as the minimum 30 hours and go from there, and then just monitor it. But if you have a lot of people who are variable, it's not clear when you hire them whether they're going to be a full-time or a part-time, then you have to adopt some method to be able to substantiate when you're doing the audit reporting why you've put either a part-time or a full-time label on an individual. So we've been looking at this look-back measurement period, and you are able to use different methods based on different employment categories according to the way the legislation has defined allowable employee classifications. And the one that can really apply to you is the collective bargaining versus non-collective bargaining. So if you want to use the monthly on your certifieds, because you rarely have part-time or variable hours in that category, it's more the classified that are variable. You could have different tracking periods for different categories of people, or hourly versus salaried, or if you had more than one union. Or if you had, I guess that's pretty light font, it says employees whose primary places of employment are in different states. So I don't think that applies to you, but it would to a lot of other private employers. So you can treat and track differently within these categories, but you can't make your own category up. And there is one up there that says classified versus certified. That's not a category. It has to more follow the language of the law here. But if you want to ask that as a legal question, can we use use your terminology to define your classes? That would be another good example of a question to ask your attorney. All right, so the resulting action, depending on which measurement period you look like, as I said, on the monthly, you'd monitor eligibility on a monthly basis, and then offer or rescind, and offer COBRA if applicable, or put them back on when they go back up to full-time. During the look back, we're going to track eligibility by measuring the hours worked over a designated time period, and then once they are eligible, coverage is offered, and then the eligibility is guaranteed for a set period of time. And so that's also one reason why, this locking in and guaranteeing coverage for an extended period of time, even though they might not qualify it, was a reason why, some employers are wanting that monthly measurement period so they can start and stop as appropriate based on their immediate working relationship with the individual. But we will be establishing three different measurement periods. In purple, the measurement period is the time during which you're watching the person's hours, that variable hour employee's time of service with you. You can pick anywhere from 3 to 12 months. The administrative period is a time then for you to then run the numbers. Yes, they average more than 30 or 130 a month. So this is a person I need to offer coverage to. You offer it to them. They decide. You get the paperwork done. You get the paperwork to Blue Cross. And you can take up to 90 days to do that. And then this orange stability period then is when they're guaranteed, once you've labeled them based on their time during the measurement period, if they're either full-time or part-time, they keep that label and that status during the entire measurement period time frame that you're tracking all of your current employees on. And so you might have an initial measurement period based on their hire date. That's also 12 months and 12-month stability period, while your ongoing employees are being tracked under a different time frame. So there's going to be some overlap and have more than one period going on at the same time. If we just look at the ongoing employee tracking right now, I'm not going to complicate it with throwing the visual over the top of this of what a new person will look like. You'll probably get that in August at the legal seminar. So I wanted you to at least get your arms around this. So here's what I've got here, and this is for the employees that are considered 100 plus, the large full-time equivalency. So in pink or mauve, whatever color, we'll start with the calendar year 14 that we're currently in the middle of. And then I've got 2015 with a little hash mark there for our October 1 anniversary date. And then I've got 2016 and a hash mark for our October 1 anniversary date, and then on down the calendar for 2017. So if we know what we're talking about here is the October 1, 15 plan year, we know the stability period has to be here. That's our starting point in our given. Okay, so we're trying to determine who should you be offering coverage to on October 1 of 15. If you're a medium-sized employer, 50 to 99, just move this back a whole year. You're going to be trying to determine who's eligible October 1 of 16. Okay? So if we know we have to have that as our stability period, and then that means we have to have 12 months of a measurement period, plus some time in there for you to work, I would like you to play with a 60-day administration period that would run from the end of July through October. And would that not allow you to get all your blues enroll information in, open enrollment finished? Yes? No? To me, it didn't seem to make any sense to move this back to end of June, or would it? To take advantage of the full 90 days? Yes, no, feedback. If you find that it would be helpful to take advantage of the full 90 days you can do here, or if you want to only do 30 days and do the end of August, and the month of September you're dealing with that final offering and determination of who gets coverage during this period, you know, just work with this and see how you like it. But that will mean then for large employers, 100 plus, come August 1, you should have your tracking system in place. August 1 of this fall. Many payroll systems are modifying their programs to track this. Who knows their payroll system is ready to go? One? Say it out loud, Darlene. Pardon? Okay. Who is it? Harris. Who else uses Harris? Okay, so that gets a few more hands. So you should be talking to your payroll people, payroll software vendor people. What other programs do you have? Okay. They will be probably the best option available to you. There are tools being built out there that will have spreadsheets and tracking so that you can think about how complex this could get if you have a lot of new hires in that variable hour if you're hiring a lot of variable hour employees, you've got to give them an initial stability based on their start date. And then you have that overlapping this, and that affects the future if they fall under eligibility or become newly eligible. You're going to be dealing and needing to look and monitor this on a monthly basis, even though you're not doing a monthly measurement. You're going to have to, you know, have your eyes on a system that's telling you so-and-so's now eligible. So having that conversation with your software vendors, I can give you, like I said, I think where I was going, I lost my train of thought. There are tools out there, spreadsheets that can help you do that, but you'd have to export or transfer data from a payroll system into that spreadsheet so it could work, and that just seems like a real cumbersome way for me for you to use. So hopefully that is something you can tackle and work on here. If you're a large group, you're going to want to get it figured out by this date, August 1st to 14. If you're a medium-sized group, you can be doing it August 1st of 15. So that you're tracking for the year to get ready for October 1 of 16. Questions? Okay, excellent question. If you were one of those 4 groups that have requested approval to do this, no, that is an arrangement that the Essdack Health Insurance Group and Blue Cross and you are choosing to comply early. You are not yet subject to the penalties just because you're doing it early. You are going to fall in the same, are you a medium or are you a large, 15 or 16. So you have to figure it out for yourself but you can use this frame of mind. Yes. But there's nobody that's going to check to make sure that's how you did it. You just have to make, so even if you're trial and erroring and you dropped somebody or forgot somebody, you aren't going to be penalized until your penalty date actually comes into play. Any other questions on this topic? Yes?
I know I had an email to you once about 5% exempt group.
Yes. That you're going to get all that in August with the legal. That still exists, but one of the other transition rules were that Instead of offering to 95% of your group, you here in the first year only need to offer it to 70% of your group. So that it got very complicated, and especially for groups that are on like a January anniversary that are going to be complying January 1 of 15. When we're pushed back late into October of 15, a lot of the transition provisions that were granted aren't really going to help us. And so I avoided bringing up those topics. You might get them at the legal seminar. But yes, there is still a cushion. You're only required to offer to 95%. And for some groups, you don't have to do that even right away. If you're offering to at least 70, you're good. Okay, any other questions on this topic before I touch on just a couple other things? So now's the time, just play with this. See what makes sense, see what doesn't make sense. Write down your questions of scenarios. Here a few weeks ago, I passed out an updated COBRA notice. They changed it May 2nd. So I have not had time to kind of fill in the new forms. So I will try to do that for you. But it allowed me to, just bring up a reminder. There are actually two more common pieces to the COBRA process. That initial notice that you should have in your new hire packets or in your benefit information that describes the law and what your responsibilities are as an employer, but also what the individual's responsibilities are as a member, because they're required to tell you when they have a divorce. It's not up to you to know this, or when they have the birth of a baby, or when they, have any other event that requires the offering of COBRA. This general notice tells them what they're required to tell you, and vice versa. The election notice is what actually gets completed when you have an event and you want to activate the COBRA. So there's a couple different forms, and so I'm going to try to get to that at some point. But if you need one, sometimes I work best under a deadline, so if somebody has a COBRA situation come up and you need the new notices, I'll try to get those done and try to do some of that modification for you.
I have a question.
Yes.
Some of our teachers who have already resigned for the next, I went, because they're concerned about the insurance, and so I went ahead and did their COBRA. Can I keep that form, or do I need to do a new one?
Yes, you would not have to reissue it. I'm not sure what has changed in it. That's what I haven't even done, to look to see what words were changed, but it wasn't a radical change that I'm aware of.
Okay.
Yeah, so don't have to redo it. But are your teachers through contract through August?
We cut them off September 1st.
Okay. Okay.
And so most districts I have found, they have to go on COBRA for a month.
Right.
The next one will not pick them up
Right.
until October 1st.
That's very common, and that's how to handle that.
And I don't quite understand that, because with a new employee that comes on, let's say they come on August 15th, some teachers go back to work August 15th. Why do they have to wait? Because one of my teachers said they have to wait until October 1st for open enrollment. But wouldn't they be eligible September 1st?
What I want you to do as I answer that question is to forget the fact that your employee is leaving you and going to another school district. Not your problem.
I know.
They could, well, I know, and I'm going to be really blunt here. And say they were going to work in the private sector.
Okay.
You've got to look. You can't treat a public sector transition any different than a private sector transition. So, in the real world, every employer can choose how long they make people work for them before they're eligible for their benefits. It just so happens that a lot of you put them on the first of the month following hire date. Dawn puts them on the first of the month following 60 days. 30 for teachers. So she's even got 2 different policies that she administers. Every employer has adopted the rules as to when a new person comes on to their plan. And when you let someone go, they're no longer eligible for your plan, and it becomes that person's responsibility to figure out the gap. And that's why the COBRA laws were written. That's the answer.
Yeah, I hear a lot of whining about it.
Well, sure you do. Yeah.
To ask another question off of that statement, our classified were handled a little bit different than our certified, but then we were worried that we were discriminating against the 2 different classes, right? So we've dropped our probation for our classified. Okay, so everybody, I mean, is that called discrimination or not?
We don't know the answer to that question yet, because if you go back to one of my earlier slides, the guidance has not been written on the discrimination rules.
Okay.
We know the ERISA laws that self-insured employers currently have to deal with address that, but it's a test. It depends on, and you can kind of use your logic, it could potentially be a discriminatory practice, but based on your earnings and who the highest pays are and the lowest pays are and how they fall, who knows if it's discriminatory or not. So Dawn doing that is fine until the time at which there are rules that have to be tested and followed. Yeah, and she can choose to make everybody the first of the month following 60 days. Okay?
For a time, an employer would have to pay the same to the classified and certified for discrimination.
That is potentially going to be part of the guidance too. You hear the question? Maybe I'll repeat it for those listening afar. She asked whether the reality of paying more towards certified's coverage versus classified's health insurance coverage is discriminatory or not, or administration coverage is discriminatory or not. And it'll all depend on how the formula comes out, what the guidance says. But now, as a grandfathered plan, you will not be subject to the discrimination testing that is coming out. Now, that doesn't prevent somebody from suing you for discriminating against them, but they would not have a statute or a law on which they build their case that was so cut and dry at once, as it would once these new rules come out. Okay. We are hearing that by 2018, every health plan will be audited for compliance. So just make sure you've got a handle on things. How's that? Go for it. Okay, what other questions do you want to talk about? Yes.
Compliance dashboard.
Yes.
I listened to the webinar. Sounded very informative. Do we really need to do that, or are you going to keep us informed?
I'm keeping you informed as best I can, but I'm not holding your hand.
Right.
And that becomes the need and where you would have trouble in the event of this. Blue Cross gives you a lot of information at renewal. What are you doing with it? So that compliance dashboard is a great tool. And I've just been to follow up. But that is a way that that dashboard tells you when you should be doing what and has all the resources available there for you and would be your best friend once you got this audit letter. And if you don't know what we're talking about, shoot me an email. Because it's a very affordable tool that you can add. What else?
I have a question. The area that I'm struggling with is keeping track of Rule 10. You know, a lot of coaches that psychology they coach, but they don't. And that's an area that we're not really addressing yet, but I need to. What are most people doing, and how you keep track of your hours? Or how do you keep track of the time card for football, all the meetings?
I struggle with getting my Rule 10.
Is this going to help you?
Yeah.
Is this going to help you? If you treat them as a seasonal, you don't have to track them.
What if their season is football, track,
That's
basketball?
a different scenario. Then you better be counting that person's hour and not by season. Those aren't separate employments
But there's
periods.
They're separate contracts.
Well,
No? It's not.
say how many W-2s is he getting?
One.
Yeah.
Okay. And what about?
When an audit, you got to think like an auditor would think. If they come to sit down and look at that person, he's your employee. What's he working for you? They're not going to look at the separate contracts.
You're saying a seasonal employee that got how many hours?
Yes,
If it's roughly 6 or less?
yes. But that's another great question to write down and get a formal opinion on.
Otherwise, you're keeping track of it, you're making up for the time. Is that what I'm hearing?
Do most of yours turn them in or different thread? That's what I'm thinking. I'm gonna start saying, we don't know how to make yours go. Well, yeah. We could have to do a time card also. Yeah. Last year.
Yes, go ahead.
Take a group of paper and like your Rule 10 are non-paper, your subs are non-paper, and everyone else is paper. That's
For what rule? This employer shared responsibility rule? Capers versus non-capers. What if the non-capers worked more than 30 hours and they were not considered seasonal? What do you do with those? Okay.
If they work 3.5 hours a day for 180 days,
Okay.
630 hours.
Well, you know I'm not your capers expert, so you just have to make sure they fill into that. Do you have a comment, Gary? Okay. So that be
Might have 30 hours, but not.
no.
And I think that goes back to Carol's comment on the rule break coaches. They get one, they still get a W-2 from you if you're an employee, and if they're working 30 hours or more on a consistent basis. They may be off.
Now, we have to use our bus drivers for 17.5 hours.
Yeah.
But they also get paid. Others doesn't. I don't know.
I don't know that I'd carte blanche adopt that capers versus non-capers, because that's not the argument you will build necessarily if you're audited and tested for an employer penalty. Like Stephanie says, it's going to ask how many hours were they working. And maybe you get to the same bottom line, but maybe you don't. And that's probably one of the scenarios why we're using an attorney that's also working with the KASB, so they will be very school educational oriented and know all those pieces. Another good question to write down. Just word it just like that. What else do you want to bounce off each other?
I work about practice subs. We use the same subs repeatedly in all the schools. They're usually retired teachers, other on Medicare, but I guess that doesn't matter. You're gonna have to offer it to them if they go over the 30 leave.
Yes. Now you can offer it to them, but they're probably going to decline. But your offering will at least avoid you of the penalties. But those folks, the ones that are on Medicare, wouldn't subject you to a penalty anyway.
They have to pay, just like any other employee, the employer portion.
If they choose to take your plan.
Right. Which could be very, I mean, that would be impossible. But anyway, if you have a sub that doesn't, hardly works for this month and then works full-time 4 weeks this month, what's the magic number that we're looking for?
Whatever they average
Through the whole year.
during this period.
So 12 months times 30
During
hours.
this period.
12 months, 30 hours a week. So 30 times 52, that's the magic number. If they work that much, they're
Well,
eligible.
are you really able to use the 52 because you've got some summer months in here?
Okay?
And the summer months are going to have to be treated just like the active school year months, which are, right. So you might, and this is a good question for your attorney. Do you take the, kind of keep an average running so that in 6 months you know what their average is, but then it changes in month 7, and then that becomes the average over the summer months, or is it April, or is it May, their most recent month? You know, how, those are the how questions we don't really know. But other than to say, it's their average during this. That determines whether they get coverage during this stability period.
So you don't offer it to them during their standard? Because
No.
you're trying to figure out what that is.
Yes, you're offering, you based on then this cutoff date of July 31st, what did they average? You make that decision during this time period. And then communicate. Yes, you're a full-timer. No, you're not. Or you've lost your eligibility, so you have to transition them to COBRA. Because you'll keep doing this all the time.
And then, so they'll be covered that whole year, that someone look back.
Regardless of what their hour average is during this, they've earned security and stability based on what they did here in the measurement period.
And I know there was talk about subs going back and forth to different schools and how who was going to track that out. Is there anything then? I'm just going to worry about myself.
You have to put your blinders on and look at your own payroll. Don't worry about their second or third jobs. You are looking at their payroll with you.
And they don't have to take coverage, you just have to offer it.
Yeah.
What else? We'd encourage you to make sure you come in that August. That I think will also help enlighten you as we get closer and closer to the D-Day. Okay, thank you very much.
I sure hope that come 2018, we don't see a whole bunch of resignations. That is kind of a scary thought. We did do a live broadcast of this, and it will be archived.
As soon as it gets archived, I can send out a link to you, so that if there is something you want to go back and review, it will be there for other people who didn't get to attend the meeting today as well. They'll be able to go back and listen to any of that. We definitely know who the experts are. I'm sure you all have their contact information. You need to contact them. And we definitely appreciate the work that they do for us, because it is a lot of work, no doubt. Be sure to take your handouts with you. You have those. Did the sign-out sheet make it around? Sign-in sheet? Okay, very good. Okay. Yeah. Very good. And for some of you, you may or may not know,